welcome to Terence to the show, and you are the main actor today.
Just come here to chit chat lah. Huh? It's been some time since I talk about market stuff with friends, and I think not a lot of people want to talk about market nowadays.
Yes. I also think the same. So actually, what have you been busy recently?
Work. I mean, I recently in July I changed a job to a startup. Very, very, very busy. A lot of things to do. So not enough time to be honest. After that, I slowed down my writing, everything, and even looking at shares. Last time you still think a bit more, like you still look into more analysis. Now it's ready to see, should I buy, should I not buy, then forget it. Then off the app, right? Then just go and pay, right? So nothing much, but I'll be sharing some stuff later, right? So I'll also be informing like what I've done. So I have some thoughts recently that I've exchanged with a friend. So maybe I can share that as well later.
Yeah, sounds good. So I think come back to the topics, back to investing topics, right?
Sure.
I think it has been quite some time since our last video. I think that a lot has happened. Market also crashed already since for a year already. So just want to know, I mean, if we look at the narrative, the market narrative, we heard about stories, talking about inflation, and then we talk about rate hikes. Now talking about pivots, and then there's no pivot, then market kind of disappointed, right? So what's your view right now when we talk about macroeconomics? Do you think that market will continue to crash for another 12 months, or actually you don't think so? Or what's your view on the market?
I mean, generally right now, before I have something to share about this as well, right? So, but generally right now, maybe just a short thing is that I would think that at any point in time right now, right, time in market beats market timing, right? So, this is something that I want to share right now. So maybe just let me share my slides.
Can see.
Okay, so generally you should be able to see a slide right now. I had this conversation with a friend recently about the market itself. So firstly, right now there's a high risk-free rate, right? The yield itself is very high. The T-bills is at 4%. So generally, if you look at if you don't look at US, we look at, for example, REITs, right? REITs at 6%, your risk premium is only about 2% or 3%, right? Is it enough for you to take the risk moving forward, right? So even on for other funds, right? For example, right now, Fed repo rate is at 4+%. I think it's at 4% today. And there's over 2 trillion on the sideline, right? Because Fed repo overnight rate has been showing there, and it is still over 2 trillion. And then with all this risk, that means there's a lot of money on the sideline. And with all this recession talk and quantitative tightening, right? Liquidity is actually out of this market. Asset bubble is bursting, okay? So anyway, it burst until right now, the FANG stock has also burst. But you think about it, right? Funds has actually been on its merry-go-round, okay? Merry-go-round in the sense that if you have been through the 2020, 2021, that steep slope, right, upwards, right? So we know that funds has went from I don't want to buy anything during the pandemic to let's go for growth until they all let's go for, I think, big tech. After they went for growth and speculative and meme and the GameStop and stuff start coming in. And then they went to NFT, crypto, and then they just keep switching out. This funds has been going on its merry-go-round. And right now, when all this recession talks, right, they went into defensive and value plays, right? And I'll show a slide later as well. It will show that the PEs, the ratios for this defensive play is actually quite high in my opinion, right? If you compare to big tech and stuff. So generally, as of now, right, market overreacts because fund go on its merry-go-round. Market overreacts as usual. If market tends to overbuy, then it will shoot up very high. Now that markets overreacts, they oversold the whole market generally, in my opinion, right now. So market is actually, in a sense, in my opinion, is oversold. Some stocks could be at its fair value, some could be undervalued. But I would say that overvalued one is that you can already count. Okay, so that's my opinion. So if you look at this is the Fed fund rate, it has been climbing up like it's like one whole stretch, right? It's like one straight line, and suddenly it's like a staircase upwards. So it's probably going to be 5%, I think, next year if whatever they say comes true.
Yeah.
And
actually, I have questions before we move on, right?
Yeah.
So
sure.
just now you talk about this, like current period where we have the interest rate keep going up, and this one sounds like market is oversold. So you are kind of hinting that this is like an outlier. So my question to you, right, is that do you think that this, like market rate high, and this round of rate high is already more than 2018, right? So do you think that the current rate high causing market down, this is the outlier? Or do you think that, let's say, year 2020, 2021, where we have like unlimited QE, and then we just like have, interest rate so low and tons of liquidity together with the fiscal policies, right? All the fiscal stimulus, all this liquidity that pump to the market and we go to the moon, right? Which one is the outlier actually in your view? The
Actually,
current one
I think the current one is outlier. What you have said in the past is also an outlier. As in, if you look across the history, these 2 points are outlier. Right. I mean, if we don't talk about the past, the previous one, we all know what happened after that, right? But right now, the outlier in the sense that now we are getting inflation as well as a high interest rate environment, as well as I would say a market, a so-called recession, moving forward recession, expecting recession. So to me, that is outlier because if you look through the history, I don't think we have ever encountered this. In my lifetime when I'm investing for the last 20, I think over 10 years, 10 plus years, I've never encountered this, right? And if you want to say, I look into 1970 plus, then I get this kind of situation, or 1980s or whatever, right? Then it shows you that actually over the last 20, 30, 40, 50 years, this never ever happened. So it is actually an outlier on itself, in my opinion. Yeah.
But then there's this saying that, market things is not like we can always define it as like up and down. Then you just shift around between these two phases, right? Because I heard there's people who say that actually since, let's say, after global financial crisis, when we started out with all the QE, and you have QE consistently until 2018, you pause for a while, and then because of the COVID, now come back QE, right? This entire period, right, we're talking about 14, 15 years. This entire period is the outlier, because before this, right, the market is not like we are not used to like zero interest rate one, right? So it's as if like 15 years of outlier, now we are back to normal, and this is the new normal. There's such a narrative. I just want to get your view. Like, okay, is this something that you agree, or you think that actually no, this is very weird. We are going to go back to like much lower interest rate, and that should be the new normal. So just want to like bounce an idea.
Okay, firstly, what you have said, right, as an outlier, right, that period, right? If you think about it, that period was where the growth stocks start to rise, and then they start to grow, and throughout this period, growth has been winning value, and throughout this period, people have been calling Warren Buffett, you suck lah, okay, and right now people are saying, well, Warren Buffett is the best now. So this period could be an outlier, but whether does it matter to me or not, right? What I've learned over the last 3 years, the ups and downs, right, is really that market will continue to change, will shift, and we wouldn't know what's going to happen next. And the usual saying is market, time in market is better than market timing, right? So if we don't time it, we don't look forward, we don't go and expect what is going to be the future macro environment. We can say, okay, we are expecting recession, we are expecting whatever, right? But the macro environment, right, may not predict what the stock market is, right? And then secondly, I think I remember there was once during a pandemic, I was very frustrated. I don't know whether I told you this in the first video.
I think you mentioned.
Yeah, something like actually the Aswa Don that professor lah, okay.
Damodaran.
So yeah. So he said something like market is stock market price is a predictor, right? It can predict wrongly also. So that's how I'm seeing it. So I totally right now is I'm a bit of a I have some opinion on what stocks I'm making. So maybe we can talk about it later. But but I think whether is it outlier or not, to me it is. It could be an outlier, but it doesn't matter to me. So I say Fed fund rate is at 4%. Then we still have 2 trillion on the sideline. So to be honest, I think there's a lot of people asking me this also like there were people are saying, oh no, it's going to be recession. Then I keep telling people, hey, there's 2 trillion out there that's on the sideline that's not in the market. Not even like, in the economy, right? You don't tell me it's recession. I've been through 2008. I know what a recession is. A recession is I had no job at that point in time. So people don't go and keep telling me this is going to be recession, it's going to be recession. It's not. The fact that people quitting from Twitter, right, or even Facebook, right, may have already found a new job in another tech firm, another fintech firm. So actually it's not that bad. To be honest, it's really not that bad. Because I've been through the worst. And you imagine in Singapore, really like I need government support to just go to a bank to work. So that is how bad it was in 2008. So
I think when people say recession, it might be like, the position sometimes is not saying that right now we are in deep recessions, right? I think that is not the case. But it could be now we are just entering the like 12 months later, you and me, full-time YouTuber, what will happen, right? That kind of situation.
Okay. I mean that's true also. That's a forward thinking, but in my opinion is just be prepared lah. I would say, I mean, even in future there will be a recession, right? Just make sure you earn more money now, lor. Like there's really nothing what you can do in the future, right? Yeah, we just continue to earn money or keep more emergency cash. That's why you see then liquidity is out of the market, right? We just put in fixed D, put in SSB. So I've also thought about if you look at this chart, this ratio, right? Actually in here makes big tech as well as the value play. Maybe for Bunty, you can take a look. You can guess which one is the I mean, it's easily to guess which one is the big tech, but the value player, right, is interesting. For example, KMB, right, is Kimberly, right, Clark, I think. So they sell tissue paper, whatever. Right? So they have a PE about. I mean, I'm looking at PE because it's very easier to refer to lah. Okay, so they have a PE about 23, which is about the same as Microsoft. Then you're telling me that tissue paper is worth more than Microsoft. I cannot get it. So and if you look at Coca-Cola is Coca-Cola, right? So it's P is at 26, right? And we look at maybe Google, right? It's at 17, right? So you are saying that in the future of Coca-Cola, I'm not saying Coca-Cola is bad, right? But I'm just saying that if you want to compare it, right? You're saying that Google is in the future is going to be so much worse off than Coca-Cola. I just don't see it. So in my opinion, right, I was saying like market overreacts, and this is how it overreacts. It overreacts in the sense that my Coca-Cola is the same, so-called same value as my Google. My Microsoft is about same as my tissue paper, Kimberly-Clark. Pepsi is about 25, similarly. P&G is about 23. And the interesting thing, if you look at it, right, Pepsi, P&G, Procter & Gamble, Coca-Cola, Kimberly-Clark, they're all 20 plus PE. And they never go above that because, in my opinion, maybe the whole market is just thinking this is the best that they should go. So I have no idea why. But anyway, it's interesting to point out that, in my opinion. But like I said, in this point, I just want to show that big tech is really, it's really being sold down, overreact. There is some sense of overreaction in the market. Yeah.
It sounds like, I mean, just looking at this as a like a subset, it seems that there are quite a number of investors, like they are already, like expecting a recession, and they already position their portfolio towards those that is like so-called safe stocks, right?
Yes.
Because the tech stocks, whether they are profit-making one or not profit-making one, as long as you are grouped into tech stocks, people will say, okay, because you tech, your cash flow, your growth will be higher, your cash flow will come later, so interest rate higher, I discount you more. So this kind of positioning is like, regardless of whether they're profitable or not, they're such, like they got whacked because of that now. But if you look at the cash flow, especially when we look at PE, which is the last 12-month earnings, right? They are actually very cheap already, right? Assuming that they are able to sustain the earnings over the past 12 months. Not to say they have to grow from here. It could be like drop slightly, right? But other companies can also drop in earnings, right? So,
I mean, I totally agree with that, lah. And that's why I'm just that's why, I mean, if I go to my point just now, right, market overreact. So what I intend to do, right? So maybe I just give a brief description, right? So for example, the easiest, I wouldn't say, my easiest view is go for big tech ETF, right? Like because the funds are in merry-go-round. So if you go into and they are selling out big tech or whatever, or the growth play right now, right? If we follow them, we will keep switching as well. And if you keep switching, you will never get your, oh, I want to go to the moon, right? You will never reach the moon. You're always on the ground, right? And you just keep switching around. When people switch, then you switch, right? They are already at the moon because they as what Bunti you point out just now, maybe they are already protecting themselves. But when people are telling you to switch into defensive now, it's like very funny, like it's already expensive and you switch into it. So my suggestion, the easy part is you can go for big tech, can DCA into your big tech or your conviction play. So that is the easy stuff, right? Just continue to do it. And there's no point in switching around because we don't know when funds will switch out or when Fed will pivot, right? So people will say, oh, we wait for Fed to pivot, so the 2 trillion will come in. Imagine if I think in January, then Fed someone say, oh, it's at 25%. Then everybody, the 2 trillion goes in, right? 1 trillion going, right? The market will just keep, don't need, maybe not to the moon, will just go to maybe a very high point, right? So that's something that we have to think about it. And if you think properly or you choose properly right now, right, you could. There's this term called generational wealth right now. I hear a lot of YouTubers talking about it, right? So if you say, to me, this is an outlier. So if in the event of an outlier, we don't take this chance properly, right? We will lose out again, right? And then when we lose out, we say, let's wait for the next inflation recession talk again. Like when you want, how many inflation recession talk in your lifetime can happen, right? And one interesting thing that I've looked through, I've a few speculation company, right? I mean, Buddhi, you know me, I got a lot of small caps. So some of my small cap was a previous, you can say, speculation company without profit and stuff. So I would say that a lot of people have sold out of these companies, no profit, no nothing, right? They are in losses, 90% down. I would say that there's no need to sell everything if you have conviction in them still, or if your fundamentals haven't played out. Not everything has played out, right? Because if you sell now, your opportunity, I was thinking of opportunity cost. Your opportunity cost is the losses that you are making already. Firstly, that's one thing. And if you switch from, for example, let's just talk about one stock I have, Fubo. I'm still holding it. I'm probably, now it's about $2 plus, I think $3 plus. I brought it maybe at 20 also have, 30 also have, but I got sell down some and then buy and sell in between. So my average probably about, I think 15 now, okay? So I'm like 15, my average price is 15 and I sell at now $3 plus, right? What company, if I invest this money in big tech, right? What should I get back? 20, 30%, 40%? Yeah, I will just make the losses on, eventually I will still have losses on this speculation company. So in my opinion, for example, Fubo, I think there are still some things that can be played for or can be waiting for some catalyst to happen. And these are things that if I keep for a few years, maybe it can reach to the moon. If it doesn't reach to the moon, selling now at $3 and in the future at $3, to me, it doesn't have any issues because, I mean, you can always say that the opportunity cost is, you can invest in big tech, but I can never get back the funds I have. So if I no longer have any conviction, it's fine. But if I still have, I think it's one that we can keep. And for those that don't have, maybe you may want to look at it.
So for the Fubo, I haven't looked into this company in detail. I just want to understand a little bit more. For example, like let's say when you say you still have convictions and you still holding to the stocks, and let's say when there's quarterly earnings, you try to like find out how's their result performing, right? I mean, yeah, the fundamentals and then the earnings call, stuff like that. But when you try to observe what are the stuff that you try to understand or try to track, or try to monitor, and how do you decide whether you want to continue to hold or sell? Like is there any like specific criteria that you pay attention to?
Okay, I think firstly, I think you asked a lot of questions, so maybe let me break out a bit. Firstly, when I buy a stock, I will have a view on what I wanted, what I think will be the near-term catalyst, the future catalyst, for example. So Fubo is a sports streaming service, sports first, news later, something like that. So World Cup is a sport, and World Cup is happening right now, and Fubo is a streaming play. So I want to see how the World Cup will affect their subscribers, will affect their revenue, and they did switch out. For example, they were looking at three, right? Cord cutters and sports betting and stuff like that. But they switched out of sports betting and they've gone more into their advertising play. So is that something that I'm concerned? Probably. But I think when I went into it, I also got one main concern, which to be honest, they are a negative gross margin company at the start. They were sort of like a meme play at the start. So it went from $10 to $60, and then after that went down all the way down to $30, then went up again, then went down now to $3. So there's this thing about, to me, right? My feel is that the main issue they have is they are negative gross margin, but and it's their cash burn at the end of the day. To me, the concern is the cash burn, and can they sustain the business without going bankrupt? So that was one of my concerns. But when you look at what the management say and do, right, they are very fast in the switch that they require, in my opinion. For example, they were talking about sports betting, but recently they switched out of it. They say they don't want to do it anymore because it's too high cost. So in my point of view, is that a right? That could be one of my catalysts that I was looking out for, but is that a right view? That could be a right view because they need to lower their cash burn. So is this management working alongside with the shareholder, for example? In my opinion, I think they are. So I still have some catalysts that I want to look out for, how it affects the whole business. So I'm monitoring that. At the end of the day, I don't know I answer all your question or not, but at the end of the day, I think when I invest on it, I have a certain expectation and I have certain criteria, not fundamentals criteria, to be honest, because fundamental wise, there's nothing fundamental to talk about in terms of numbers. They are negative gross margin, but their revenue has been growing significantly, like maybe 100%, 50% kind of growing, but they are still like making losses. So there's definitely a lot of risk. But in my opinion, that's why I say if you want to look for generational wealth, for example, you buy now at $3, can it go to $10? Right? Is it so hard? Yeah, so this kind of thing, I think is something that people can look out for.
Yeah, depends on like whether they are able to turn profits. For example, you say they are negative margin, right? So when you flip from negative to positive, I think easily there'll be a huge returns. But the risk is that you're talking about, just now you talk about the bankruptcy, right? Or let's say not bankruptcy, but if they have to tap into market to raise capital, then there will be dilutions, right? How do you like look at these things? Like, do you really see how much they burn every quarter and then see how much cash on their hands? Do you do this kind of analysis?
I do monitor that because that's the main risk. And then recently, actually, I have been thinking about, should I sell, should I buy, should I sell? I have been thinking about it like for a very long time. And recently, what I realized is that they are negative 100 million again. Like, so you can imagine now over 1 year is like negative 400 million kind of losses. But there are this negative 100 million, there is this 30 million of non-cash component inside. And if you look, then I will browse into their cash flow statement and look at their net cash from operating, see how much is losses. So there was a drop of 30 million, for example. But if people don't go into a deeper due diligence, they don't see that. They don't go, and because when you look at cash flow, right, they will say current 9 months versus previous year current 9 months. But you don't see the 6 months to the 9 months portion where how much is this losses in cash that because cash flow is ongoing numbers one. So you cannot see it directly from just the 9 months figure, and you cannot compare unless you go deeper and then you look into it and stuff like that. And the point right now is they also make comments that 2023 they will not have any cash call, no secondary offering. 2024 maybe, and 2025 they say they will turn profit. So the interesting thing is their sports channel, right? So now it's World Cup, right? And in 2020, and they are very big. Their streaming subscriber is in US and Canada, most of them. But in 2026, right, the World Cup will be in US and Canada. They are the hosts. So if you think about it, I think there are certain things like you can really, if you can track it properly, they're actually doing some things. They are just trying to their best to work. So I mean, you don't go and screw them now. No point also, right? So now it's at $3. I sell already. I'll still get that sum back. And if I buy the big tech, like I must for example, if I buy, let's just say maybe, and I need 60 times 3, I to buy one share of Amazon, for example. Yeah. So that is like not Amazon, sorry, 60 times 3 to buy one share of Tesla or a bit more than that, right? So there's really to me there's no point in doing that right now. So I can just chuck it aside, it doesn't matter. But I just monitor it.
Yeah. When you bought the stocks, what's the expectation? And then now you are just tracking, monitoring. Unless there's serious issues that you have to like exit, right? For example, cash burn too much and you don't want to like continue pouring money in, right? So that kind of situations is a bit like you want to avoid that, right? So I think all the like reading the financial statements, those are important. If not, you don't know whether these things will come or not.
Yes, I mean, I totally agree. And I think, Bunti, I'm more like a small cap investor. So to be honest, I think the small cap are better supported right now as compared to the big caps. But anyway, small cap, let's not talk about that right now. Okay. I think we can always choose another time to talk about it. Okay. Yes. Anyway, that is my sharing.
Okay. Yeah. Thanks a lot. Okay. Just want to continue discuss, right? Because we, in advance we prepared some questions and I just want to run through with you. The first one is that I still remember our the interview, we talked about a couple of companies. I still remember we talked about, the Digital Turbine, and
Cerence.
And then we talk about Singapore stocks and then we talk about China's, right? Maybe we just quickly run through because I just want to know, is there any updates since the last time we chat, which is, I don't know, let's assume over the past 1 year, right?
Yeah.
So is this Digital Turbine, are you still bullish on it? And do you think they are on track towards, like the 10x kind of results? Or actually, what's your view now?
Okay, so Digital Turbine, let's just say probably it's at $12 now. Probably also another 50% fallen since I talked to you, I think. Could be much more. I'm still holding it. I still have belief in it. And in fact they are profitable. They are not the not profitable side of things. They are the profitable, a lot of cash kind of companies. So I still believe in it. And right now, to be honest, at this $12 is easier to 10x than my previous, I think $30-$40 to previous to 10x. I'm still holding it. I am still managing the position because it's quite huge in my portfolio. I can't keep buying it, so I'm managing it through options and as well as through options And I may just sell a bit and then buy back because I know the price keep going up and down. So to me, it just, I don't know sometimes I will just sell a bit if I see the price jump too much. So that's for Digital Turbine. I think for Cerence itself, I sold it. The reason why I sold it now is I think at 16. I'm still monitoring it, but I sold it at 45. That time when we talked about probably $80-$90. So the reason why I sold it was the management there was suddenly the CFO and CEO quit, and I don't know what happened. And then the next quarter, right, the new CEO talks about previously they have front loaded the revenue. That means they are a licensed company, so they front loaded the license. So when, for example, I sign a contract with you, and I'm supposed every car that I'll earn a certain license, right? So they sign the contract and they front load the license itself. Maybe like I say, there will be 10,000 license, and then the 10,000 license they front loaded. So imagine the revenue is being boosted at the start when the old CEO and CFO is around. And now moving forward, it will probably die off a bit, and I'm just monitoring it. But right now I think it's quite stable. So but I yeah.
I see. Is that legal actually? Like they do this kind of front loading? I thought there should be some financial.
To be honest, I don't know the whole story, but I feel that it's the whole, because the first transcript or the first interview that the new CEO had, it was very screwed up. The whole transcript was like, I don't know what he talking. They were just like saying this cannot be done because this was the issue of the old management. So we are the new management. We are just trying to help out, and this issue may last until end of 2023. So end of next year. So it's like, walao, then as a shareholder, you're like, shit, I don't know what to do. Then I just sold everything because I don't know what is going to happen. And my thesis is like, oh, they will do this and that. They will work with various automakers. But it's just that no point already. I don't know how to trust them, so I sold it out. So that was I realized that was one of the things that if you don't trust the management enough, right, just screw it. Just sell the stuff.
Yeah, I think I totally agree with what you just said. For example, like, when we talk about like reading financial statements and then listening or even reading the transcript, right? Sometimes it's not about like just want to know what is going on. For example, yes, we do want to know. For example, like when I read the companies I invest in, I'm interested to know whether they sell more iPhone. Let's say Apple, right? Sell more iPhone or sell less iPhone. I'm interested to know. But let's say if it drop, right? Do I sell immediately? Usually it's not, right? I mean, for really investment, it's like just to know. But let's say for those companies that it could be like we don't have the full conviction, or we just want to try to understand the companies. I think usually we are reading just to get a sense of whether these are honest manager or not, right? Because it takes some time from us reading the transcript and they telling us what they plan to do over the next 1 to 2 years, and then we follow up with their actions and with their result, and then we kind of like check back how they change the narrative. I think those are quite helpful to determine whether they are honest or not. And your situation is really hit the part that say, okay, maybe we need to be careful now because new CEO, new directions, right?
Yeah. So that was why I saw it. I mean, looking at, just what you said just now, right? The interesting thing was, right, when I wanted to sell, I don't know if it's out of topic, but I wanted to sell Fubo, right? I was thinking, if I sell Fubo, what should I buy? Then I was looking around for streaming play. Then I realized Paramount Global, I think, it's actually sort of like undervalued in a sense. Because you look at their ratios compared to all the streaming services, right? They're like undervalued. So I was very interested. Then I went through all the interviews. Then I realized, very funny, they keep talking about the same thing. Like they just keep talking about the same. They're like a big company, right? Then like they just keep talking about short-term catalysts. Like my streaming, I'm working with Walmart, and I'm working with Walmart, so I'll get new subscribers. That's one of the main thing. And my Top Gun, Top Gun is their movie, so yeah, Top Gun is very good. So revenue will come in, and then they just say they still got so they still got what's that? They got streaming, but they also got their cord services, the current, all this cable. So they say, oh, the good thing about us is, if we have a new movie, we can put it on both services. Then that's all they say. Then I was like, huh? Then I was comparing, then I was listening to Fubo, then the CEO was saying, oh, in the near future, we use this technology, blah, blah, blah. We will do this and we will do e-commerce on net. And we can, my technology can see how the people are moving. If people click the player, then it's like, wow, this is so amazing. And you hear, and somehow when I hear the Paramount Global, right, I hear from the CFO, the CEO, like I hear like 10 interview, right, it's the same thing, right? Well, then that means I only buy for this stock for maybe like for 1 quarter only. I'm not even looking further than that. So I didn't go for it eventually, but it was undervalued. In fundamental financial wise, it was undervalued. but I just forget it.
Yeah, it's very important to, look for the managers that have the align, the mindset align, right? Then you read the transcript, you're like, wait, very happy. If not, it's like, oh, especially when the stock down, then you read a transcript, they're even painful. I mean, those need to avoid. I do get the sense, even for the companies I invest in, when I read their transcript, right? Some when I read even the bad result, but we know that, okay, you are facing some headwinds, but we can understand what you're trying to do to make the situation better, right? I think that one is really very smooth, very calm kind of reading, right? The other one is like, wow, some of them is really cannot.
Some of them really cannot. So that was quite interesting for me. And I think you're asking me about China, right? So I no longer hold any China stocks. Alibaba, Tencent also.
Also. When was this? I didn't.
It was after you sold. It was after you sold Alibaba. I think after 2 months or what, I sold.
Okay.
And after that, I only held on Tencent, but eventually I also sold.
I see.
The reason because of common prosperity. I would say that was the main reason. And I cannot. I had this conversation with my same friend. So I was like, we all know that they are undervalued. It is undervalued. I have no doubt about it. But they cannot grow in the direction that I think they themselves want to grow. And if they cannot grow in the direction they themselves want to grow, I don't know how they can intend to grow. And they are just, and there's just too much power. Xi Jinping has too much power. I'm a bit scared. So I rather don't do that. Yeah.
Which is a good decisions. I assume you sold, because let's say for these two companies, I think their share price still quite weak recently, right? Especially Tencent, they dropped quite a bit, right? I think you exited.
I don't know. I exited at a loss still. So 330 plus. I don't know what's the
that's
price.
Quite high, Now it's much lower than that.
Yeah, Alibaba, I think I exited higher than you, to be honest. I think 100 and I think 18. I think or 12, I forgot. Then I sucker. I just sell everything. We all know that it's undervalued. Actually, the whole world knows they are undervalued. But it's just I don't know what Xi Jinping has in his mind to what they intend to do with this. And if they really keep breaking them up, to be honest, they could be worth much more. But you break them up, it's just to help your common prosperity. I'm a bit worried. Because there's actually one time where Alibaba was buying a semiconductor, I think last few years when it went bankrupt or whatever. Right? Then it's like, how in the hell is this going to help your business? In my mind, I was like, you buy this semiconductor for what? Why waste your money? Then it's like, I got a feeling, maybe the direction didn't came from the CEO. So that's my opinion. So I just left it as that.
But let's say, for Alibaba, I don't know, I haven't followed them that closely, but I'm aware that they started out from a very high margin business, which is more on, advertising, right? And then they move into selling groceries, higher volume, but lower margin. But at the same time, their growth is not super high growth already, right? So I think that there's some concern, even when we just look at the financial and don't talk about the politics, right?
Yeah.
But let's say, that one I can actually, that's also the reason why I sold. I didn't sold because of all these politics things, because can't predict the politics that much. But come to Tencent, right? Actually, I also noticed that they shifted their strategy after all these episodes. For example, they gaming, they also have some problem, right? But they try to grow the overseas business, right? They try to buy more gaming companies overseas, right?
Yes.
So let's say if they shift their strategy towards overseas, and actually I don't think the regulator or the governments will try to influence them on how they manage their overseas business, right? So by right, if we just look at the fundamentals, should be okay, right? And
I would say, are you concerned? I would say it's okay, but the point of, it's like Singapore men, right? We have to do NS, right? Then we lose 2 years of our time, right? Because we need to grow we need to grow ourselves and become the man that we are supposed to be. Right? It's a bit of attention, no? They have to purposely shift out. To be honest, they may not need to do that, but they have purposely say, okay, we need to change our direction, and they need to take time to grow, right? And throughout these few years, right, they'll be growing, and it's not like they can say, okay, we go out and grow, and then 放过我们一马这样 like things were still in their own country, things will still continue to happen. And it's like cash burn outside in international. They'll have cash burn internationally because they're growing. But they will, then people will continue to nitpick on them in their own country, right? Then to me, it doesn't make sense to me. Then as a shareholder, I'm very stressed. Now every day I'll say, oh, China got news, China no news. No news is good news, or got news, no news. Like, walao like, forget it really. No point investing in a company like so stressed out. So it's like, I think there's this period of they need to grow to become the new Tencent, which will eventually be as big as what they were previously. But this period, if we want to talk about opportunity cost, this period is an opportunity cost at a very high, because they are you don't know how far they'll fall. And if you haven't owned it, it's fine. But if you own it, right, then it's the thing of, should we sell it now? Because it's not like they are at $3 now. $3 okay lah. But they are still few $100. There's the gap is still like there. And I don't know. I just rather don't do it.
But let's say if we look into more details, for example, like there are still pockets of opportunities, right? For example, Alibaba, people talk about like clouds, like they are still number one cloud in China. And we all know that China business don't expect, foreign cloud companies like AWS or Azure will go in and attack, right? There will be big enough market for these players. What's your view on this kind of like, opportunities? Or you just like, because this opportunity itself, I do think that these are the place, if it is executed well, right, it will become a big, revenues contributions to their companies, right? So there are some things that people are optimistic about. So you are totally not interested?
No, really not interested. Like, I mean, I can understand why people are interested, and I can be interested as well if I really see the opportunity. But when I think more than that, the point right now is, I think Keng really did a very good job, right? He ignored it, like he just like, I just continue to buy Alibaba.
I'm here, by the way.
Oh, hi.
Oh, Keng is here.
Yeah,
on the camera.
You can on the camera. So like I admire him for that, to be honest. I can't do that. But it's the same as, for example, holding on to Fubo, holding on to Alibaba. I think everything is the same, right? If we have conviction in it, there's nothing wrong. I mean, I have to be politically correct now that he's here. I think there's nothing wrong with it. It's fine, and just continue to hold on to it if you have conviction. But to me, I really don't think that I will buy them. In fact, right, these 2 years, in my opinion, I think China is I still see it as a political thing. I know we should not look at it, right, in the macro environment, market timing and stuff. It contradicts what I said at the start. but to be honest, I don't have those conviction right now, and I don't know where they are right now. And China is very, in the long term, Keng will be a millionaire, but in the short term, he will continue to have to continue DCA in, right? So that's my point. And if I need to do that, right, I don't think I want to do that because I have enough companies in my portfolio that I need to DCA in. Having said that, because I got a lot of small cap, I got big cap, big tech, I got about 10 companies right now. So I need to choose and pick, right? It's a bit hard. If I add another Alibaba or Tencent, that's it.
Yeah. I think the core difference is that when it comes to convictions, right? Because when you say you have like 10 companies, you anyway, like talking about Tencent or Alibaba, either of them, you don't have a strong conviction at the first place. So it's always a risk reward kind of things, right? Like, okay, if you invest in other companies that you have higher conviction on, you are, there must be a reward that you will try to aim for, right? And then talking about risk also, you will value differently. Just because of you present yourself with the choices, right? But for us, for Keng, I think he's like, super high conviction on Alibaba. I think this is not just the companies, right? Maybe later Keng can correct me if I'm wrong. It is like high conviction on the companies. Like you can talk about their fundamental, their size, their management, their track record in the past, and also the convictions in terms of how the country is run. So even the macroeconomics, you can be bullish about it depending on whether you agree with what they do or not.
Yes.
So I think that's sometimes it's like when we say we try to find a manager that align with our thinking. I think when we select companies also, we will select companies that operate in the countries that is managed according to our, our values, right? So I think that's where you see there are people who who are like, okay, I'm really bullish because I do see that this is the right way. And there will be people who say, oh, no, freedom is the most important thing. Don't lock me down. That kind of like different thinking. Yeah.
Agree.
Chicken, you want to comment? Since you are here.
I think, as in, okay, at least from my perspective, because I also have conversed with Boon on quite a few occasions on how China is run and some politics stuff lah. But I'm not going to comment too much here because I presume he's going to upload somewhere. I do agree that I'm generally quite aligned with what's happening, and I do have my own train of thought on why certain things are done certain way. So there are always two sides to a coin, and even though there is a mainstream narrative that they want to build right around loyalists trying to invade Taiwan, whatever, but it's fundamentally against what I believe in. So that's why it doesn't bother me. I think that's the part on like talking about macro and politics. Then in terms of investing into companies, actually now when I look at my portfolio, I have 8 companies, but it's just that the top 2 hold 90%. The rest is just start out like less than 1%, and then I'm just trying to still study the company, understand a bit, and then just start building the position. I think that's my allocation thus far. So yeah, and for Tencent and Alibaba, actually right after that party congress thing on Monday, the whole market just tanked, right? Yeah, I actually tripled down on Tencent. Like I just went in to try to catch the bottom lah. But I mean, it bounced back quite a fair bit since Monday. And a lot of my friends just tell me, hey, 10-20% take and zao lah. Like just faster take this, like collect nickels in front of the steamroller, play this kind of technicals. And then I'm like, ultimately, I think we're all playing a different game. We all have different objectives with our portfolio as well. So you engineer it however the way you want to play lah. And I'm not that confident that I'll be a millionaire. Of course, there is this tail end risk that suddenly really they go back to the 1950s and then they nationalize everything and take back. I fundamentally don't believe that will happen, but of course there is that tail end risk that it will happen. Then if it is, then so be it lor. I mean, that's the risk that I'm willing to take with my portfolio construction thus far lah. And yeah, I think that's about it. But yeah, I generally do agree with whatever that's happening. So actually, I'm bullish about the country as well. Not only like the companies, but then people ask me, oh, Hang Seng Index, CSI 300, the Golden Index, Golden Dragon Index, what's happening? I mean, in a mature financial market or a mature index, then the mechanisms make sense. But in a non-matured market, you can't really look at indexes. So that's why I generally don't buy, or at least I'm not buying into China indexes lah. But I'm picking stocks on my own. So yeah, that's just my 2 cents.
Thanks a lot, Chicken, for your comments. It's always fun when we chatting. There's more people joining the chat. Okay. I think I've cleared all the questions that I have for Terence already. Just maybe some closing questions. I'm not sure. Like, are you still like writing your blogs and providing updates on your portfolio, stuff like that? Do you still like doing that kind of things? And I mean, just want to get some updates.
Yes, on a slower pace. Like I said, due to my new job, so at a slower pace, much slower. I think you understand. As content creator, it's a bit hard to keep the passion going for a long time if our returns are low. Let's just say so. But then end up your passion and to keep your passion. It has to just keep going, right? Then you have to come back reality where resources is bread and butter is important. So I think that's what's happening to me. So I'm writing but slower. Yep. But I'll continue to share on my Telegram. I'll continue to maybe share on your Telegram and Twitter and Facebook. But I think I just want to make a comment on what Chicken has said. After when you hear what he said, right, you can hear how a convicted investor talks. I'm convinced for example, I'm convinced in Digital Turbine. A lot of people keep telling me, hey, like this, you are over. You should have said that you were wrong at the start. Whatever. There are people in my Telegram group has been telling me off, to be honest. And even when I talk about football, people also tell me off. But I just stand by it, right? Like it doesn't bother me, so okay, But I do. If some people are just PM me and say, hey, I intend to sell. Then I just tell them, okay, if you intend to sell because Did you buy because you followed me, for example? Then some of them will say yes. Then I'll be like, oh, like as content creator, right? Then in a sense that you say, well, am I doing the right thing? Like there were last time, right, when I started writing blogs, right, about Singapore company, people will come up to me and say, hey, wow, great job, I buy your stock and earn a lot of money. Then you will feel good. But obviously there was always a downtime where, hey, I buy your stock because I follow you. Although you are not supposed to, we keep saying, hey, our opinions, but people will tend to do that, and eventually bad stuff may happen, right? And it's quite sad that this happens. So I wouldn't say that, I wouldn't force people to say, hey, don't sell. You'll go to the moon, that kind of thing. Like no point. so I just do so. But I mean, I admire what Chicken did, to be honest. Yeah.
Okay, Chicken, you want to comment something? So you
I also wanted to like kind of have a quick comment on what Terence has said, right? In this aspect, I do understand where you're coming from, but if today is not Digital Turbine, it will be Alibaba or TSMC or whoever that they followed someone else in this online space. So I think the issue here, sure, I think the owners, we always say the owners is on the viewers or people that consume the content, right? But I personally haven't really found an effective way to square away this uneasiness, because at the end of the day, when they earn money, they're not going to give you the commission or say that, hey, I split you 20%. You get what I mean? But then when it screws up, or when whoever, I mean, any stock pick in 2022, other than oil and gas and your traditional companies, probably ended up in a loss. So then they're trying to ascribe all the blames to everyone else on the YouTube scene. And I'm just like, okay, I mean, if they're happy with it and it releases some of their stress, then I don't mind being a punching bag. But that said, I always like to say, this to the moon or don't to the moon, right? The bell haven't ring yet. So I mean, unless the company is going to go bankrupt and your holdings just evaporate, then still got time to catch up. That's all I can say. I don't know whether it's Fubo TV that will come back up, or Digital Turbine, or Alibaba or Tencent or TSMC. Who knows whether it's going to be banned into oblivion? I don't know, but I'm just saying, like, the bell haven't ring yet. So don't, when you're winning, don't be too cocky. When you are down, also don't feel too bad. That's all I have to say.
Yeah, totally agree. Actually, I also want to comment on this. I was try to look at things from the audience perspective, because to me, right, I think, let's say, okay, both, like Terence, Chicken, and myself, we create contents, right? Some people might follow us into some traits, right? I mean, that's totally possible. I'm not saying that all of us here are like so influential, but there will be some people, right? But my concern is not so much about like we become the punching bag, because, for example, let's say I talk about one stock, and then the other, someone who watch my video and just buy that stocks and lose money, right? I would say that they can punch me however they like, but then actually from our side, we don't get anything. We are not getting painful one, we are fine one. But the one that will affect is actually the audience himself, because in order to become better, right, you have to really like know what your action is, and then you need to be able to come back and look at your actions and try to improve on that, right? But once you try to blame someone else, right, then it's as if like, okay, Terence, you recommend this to me. Now I lose my money, but you should do the learning. You should learn more. And I don't learn anything one. I know fault one. I always right one. It's either I earn money or someone else fault, right? So I think that kind of situation, I mean, standing from the audience perspective, is that they actually like take their money and let you learn. I mean, this kind of thing is like from their perspective, it's really not a good maths. Like the equation doesn't work like that now. So it really wasted whether we earn money or we lose money. I think there's a lot of learnings. Even just learn how to deal with losses, learn how to tolerate the volatility. I think all these things take time to learn one. I don't think people are born with that one. For example, you are okay with 10,000 losses now. You might be okay, but you might not be okay with if it is 100K, right? And even if you are okay with 100K, you might not be okay with 500K. But you need to have that money, and you need to lose that money in order to know whether where is your threshold. For me, myself, I lost like, I think 200K just this year. I'm like, okay, I still take it okay. Maybe another 200K, I would say not okay anymore. That one, I don't want to say too much, but as in, I take it as a learning, so that we all, all of us, including content creators, including audience, we all learn from each other, and we learn from our own mistake and also our wins, right? So you also need to know how you win so that you can replicate it in the futures, right? Yeah. So that's my takeaway. I'll just pause here just for closing statement. I mean, from both Terence and Keng, and then we close the call. We try to keep it like not too long. Also want to rest.
Keng, you want to start? You want to have any closing?
Yeah, Keng.
I have nothing much to say though, but yeah.
Okay.
Yeah.
Okay.
Yeah.
For me, I think as I said at the start, market is overreacting. Don't go with the merry-go-round. Stay on your course. I mean, do your thing, and eventually, I think everyone will be going to a moon soon.
Thanks a lot, Terence, for all the sharing. I will end the recording here and say goodbye to the audience. Then we see we want to continue to chat or not. Okay. Thank you everyone for watching the replay. See you.